G'day. Body corporate insurance. Now, it's one of the biggest ticket items in your budget. So what does it actually cover? And more importantly, what it doesn't cover. So I thought I'd today go over a bit of a summary of what your general, and now each insurance for each building is slightly different, but this is basically the gist of it. And I thought I'd go through what building insurance with a body corporate covers. Okay. So as you can see, there's a bit of a summary here. This is one on 85 Beach Road. And okay, so it covers the value of the building. So if an earthquake happens, in this case, it's covered to over $42 million. And that included in that value is, anything, hidden gradual damage caused by water leak from any internal, water pipe, water tank or waste disposal pipes, $5,000 per unit. So it also covers certain things as if the whole building isn't completely destroyed, if you know what I mean. So this is obviously in case of natural disaster, and you have to have that. And you have to have building insurance, and it is one of the, as I said, probably the biggest ticket item in your budget, and represents a large portion of your body corporate levy. So you have your common property, and I have certain amounts that, for example, alternative accommodation. If the people are living and can't live, and you can't live in your apartment anymore, that means I'll pay for owner occupiers $20,000 for per claim to while you go through the apartment being repaired. If there's a fire or something like that, that you have accommodation and you're not out of pocket. Now, stolen keys, I'm not too sure what that really means. I haven't really come across that before. Stress payment, that's pretty obvious. And then the big one really is when it comes down to if you're renting it, okay, how much you covered with rental management. So here you've got loss of rents, management fees, for the whole building they'll be covered, because you could have a lot up to over $3 million, $3.5 million, and claims of preparation costs and indemnity period, and that's for basically seen as 18 months. So that means if you've got up to 18 months cover for loss of income through rent, so you can meet your mortgage and all that kind of thing. Okay, so what it doesn't cover is it doesn't cover your home and contents. It doesn't cover your personal belongings in there. You still have to have home and contents insurance with your own apartment. The building insurance doesn't cover that. It covers all the common property, it covers your unit, it covers your fixture and fixtures, your fittings and your fixtures, but not like your TV and your bed and your furniture and your china and things like that. And your jewellery and things like that. So as it covers here, here has a summary here. What is not covered: restrictive cover applies to units vacant for more than 60 consecutive days. Okay, tenants, contents, personal effects, and liability. So this one here is quite important. So if it was vacant before the event occurred. Okay, tenants, contents, personal effects, the same as owner occupiers. Owner occupiers, contents, it says it. Landlords cover for furniture and whiteware, building defects, including leaky buildings. So if there was an actual earthquake and it was a leaky building, it's not going to cover those repairing that, because that damage was already there in the first place. Portable aerials or satellite dishes, portable swimming pools or spa pools and things like that, but obviously for ones that are fixed on common property. So you obviously have all set out your excesses. The higher the excesses, the lower the premium. Same with anything else. So your standard excess $500 per owner, owner occupied excess $250. As it says it quite there, gradual damage, water damage, that kind of thing. So hopefully that gives you a bit of an idea of actually what insurance is covered, and the thing is, when you're looking at different insurance quotes, there'll be certain things that change a lot, i.e. how much cover have you got for rent if something happens to the building and you can't rent it out, that kind of thing, or how much are you given to pay for alternative places to live if you're owner occupier. Other things that really change in those time frames, and that kind of thing, and also things like earthquake ratings and things like that can raise your insurance. So hopefully that's a pretty quick cover of what it covers, and hopefully it answers your questions and enables you to figure out, okay, what do you need to do when you're an apartment owner other than rely on that insurance. Anyway, hope this helps. Andrew Murray, Apartment Specialist. Cheers.